PayPal stock is down 79% off its highs in recent years, and a lot of investors are intrigued by this company. Some are attracted because of the cheap valuation, and others are turned away because the company is seemingly moving in the wrong direction. Competition is rising, and the company is losing millions of active accounts as it offended some customers a little while back by changes in their policies. So, really, a lot of reasons why people are talking about PayPal stock, but I'm going to go into the company's latest earnings call with the acting CFO and get an insight into why everyone is talking about PayPal stock and whether or not this is a buying opportunity or if this is something that investors should avoid. And, right off the bat here, the CFO says, we're reporting revenue at the high end of our guidance range and earnings per share consistent with our expectations. And I will say, following this company for several years now, revenue and earnings growth are pretty solid, throughout this year. You know, mid mid to high single digit revenue growth, strong earnings growth. So that really hasn't been a question mark for the company. But, right away, right off the bat, you can see a big question mark for PayPal. And you could see it right up here, acting CFO, right? So the CFO is not a permanent CFO. The CEO has announced that he will be retiring by the end of the year. And so you start to see some of the question marks as well as some other areas here. Like during the quarter, they announced a multi year agreement to sell their existing European buy now and pay later receivables as well as future originations to KKR. So essentially, what PayPal will be doing is originating these buy now, pay later products and then selling it to KKR so that the company is not straddled with the debt on the balance sheet. So they're free to make more of these loans, to make more of these agreements with consumers and then sell them off to KKR. Now, there's pros and cons of that, right? The one of the pros I mentioned already is that it frees up the company's money to then make go out and make more of these loans, right? But the downside is that of course PayPal will take a lower profit per loan, per product, per customer because it's selling it off to KKR in, you could think of it like a wholesale deal, selling it to them at lower prices so that then KKR can assume the capital risk and then earn the premium in making that deal. So interesting development there. Also, some of their other businesses are growing nicely. Their value-added services grew 37% to 731 million. That performance was predominantly due to increased interest income on customer store balances and to a lesser extent revenue growth from consumer credit products. Now, the interesting part here is the interest income on customer store balances because this is the area where it's more temporary in nature because interest rates have exploded higher in the last year, and that's allowed PayPal to generate more money from their customers that are storing money in their PayPal balances. But that could reverse when interest rates decrease. So investors are looking at this area and saying, well, yes, it grew nicely, 37%, but is that really long lasting, or is it just like, when interest rates are high, you'll get that benefit, and then when interest rates normalize, this source of revenue will cease to exist, and this is lucrative, right? It's just interest income on balances. It nearly all flows to the bottom line, and so investors are like, that would have been nice if this was a longer lasting source of revenue for the company because it is so lucrative, but unfortunately it's not. And then two more things I'll talk about here, and that is that on a dollar basis, credit losses increased by 65% for the company, for PayPal. And the provisions in the quarter were driven by a build of 146 million. we're seeing a normalization of our credit portfolio to pre-COVID delinquency levels across our consumer and PayPal working capital portfolio. And that's really bad news because I'll back up here and give you some insight into consumer balance sheets and consumer payment behavior. Now, before the pandemic, 2019, consumers were relatively healthy, right? Unemployment was relatively low. Paybacks were, at historical standards. People were delinquent at a normal percentage on their loans. But after the pandemic, all of that stimulus that entered into the economy worldwide, it wasn't just the government in the US that passed fiscal stimulus and, all of the benefits to consumers, but it was a phenomenon in several parts of the world. And so consumer balance sheets were incredibly healthy, more so than in a very long time. And so delinquencies dropped to historically unprecedented levels. People were making payments at levels that is not normal, right? There's usually more defaults. People lose their jobs, things happen, and so they miss their payments. But during the pandemic, that fell really, really low because governments were helping consumers so aggressively in so many areas of their lives that delinquencies decreased substantially. But now the bad news is they're rising again. They're rising again, and there is no telling how far up they will rise, right? And so that's the worry, that's a concern here. That's one of the reasons why you could say that investors have kind of looked at PayPal, looked at the cheap valuation, and said, you know what, it's cheap for a reason. Maybe we should stay away. Now, that's not my opinion. I think PayPal stock is a relatively good uh, value at these levels, a good risk versus return. I have PayPal stock rated as one of my top stocks to buy, acknowledging that there are plenty of headwinds, plenty of uncertainty, starting with the management question, who's going to be the CEO, what about the CFO, all of that, right? But I just think the business, the core business, is strong enough that I think there's a good risk versus return here. But that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.